Hi, everyone. This is Jacqui Cooper with JCooperTravels talk show. And today I have an old friend on who is an expert in taxes and consulting, both for the individual as well as for the business. And before I bounce over to him so we can talk about our topic of the day, for those that might not be familiar with JCooperTravels, I started this last year and it was primarily supposed to be focused on travel around the world because I'm a certified travel agent and I was trying to help people with their travels, their travel insurance. But, as fate would have it with COVID, travel stopped. So I have a large LinkedIn connection and I realized that a lot of the individuals I was meeting had really wonderful stories that needed to be shared. So I rebranded J Cooper Travels, and it's now about everyone's story. How do we travel in life, both personally, professionally, career-wise, health-wise, as well as geographically. So hence today's conversation is all about finances and how do we keep them, and how do we make sure that we can support our family. So the guest today, Joshua Thompson, he actually I've had him on a number of times. We've talked a lot about the variety of topics within the tax code and planning and things like that. And I would say I highly recommend that you connect with him because there is a lot of changes that are coming down the road in a few years. And I know I'm not always a planner. You sometimes wait, but think of this. Right now it's July. We're already halfway through this year. So this is definitely the time to be thinking about how do we plan for the end of the year? How do we take advantage of any of the tax savings? If we haven't, what do we need to do for the following year? So there's a lot to think about. And it's all about, enjoying the income that we're earning and being able to legitimately take the write-offs that we deserve. So with that being said, Joshua, welcome. I'm going to let you introduce yourself and your business. And how are you doing today?
Jackie, I'm doing great. I appreciate you having me back. It's always a pleasure to be here with you and talking about the most exciting thing in the world, which is taxes. I think we all know that. But you have a great point that you mentioned earlier when you talk about planning, because I think in the past year alone, they passed about 3 different legislations around PPP, COVID, just tax law changes that affected just about every individual out there, whether you're a business owner or not, and you receive the stimulus check. It's just so much that was changed. And you'd be amazed what planning can do for you to figure out what opportunities are out there that you didn't take advantage of. I know a lot of people didn't know about the employee retention credit. Or at first you weren't allowed to take it if you use the PPP, but now you can take it. At first, you couldn't take it if you started your business before or after February 15th, 2020, but now you can. There's so many things constantly changing, and maybe that'd be a good something we talk about on another episode. But I know today we're talking a little bit more about the child tax credit. A lot of individuals out there and kind of dive a little bit deeper into what are the changes that just got implemented. But as always, Joshua Thompson Tax Group, just throw it out there. I probably should have led with that, but that's all right.
That's okay. Well, before we get into the actual topic, why don't you go ahead? We're going to mention your website and how people can contact you at least 3 times during the show. So if you guys are listening and don't have a pen and paper handy, don't fret. It'll also be in the block below the podcast. So that way you can come back later to J Cooper Travels Talk Show and listen to this episode or the other episodes that Joshua and I have had conversations about. But go ahead and mention your website so they can reach out to you.
Definitely. So my website is thompsontaxgroup.com. That's Thompson, THOMPSON, and then taxgroup.com. You guys could also reach me at my number 805-364-0908. That's my cell phone. So you guys could text it, call me, hopefully, preferably in business hours, but you guys could definitely text me. I'll always text back if it's not in business hours. But once again, that number is 805-364-0908 at thompsontaxgroup.com.
And I will mention that Joshua is currently in California, so that's Pacific Coast time. He is about to head to Texas, and he's going to have a lot of different tales for us about his new neighborhood. Yes. So he might be in a different time zone. So, again, with all due respect, definitely different business time zones. But so the child tax credit, I know that I heard that individuals possibly were going to be getting checks starting. But then I was kind of confused because I also heard that at the end of the year, if they didn't qualify for something, they might have to pay it back. So that got me, that's why I picked up the phone. I said, we need to do a talk about this because it's not so straightforward. And if people aren't thinking about this, they could maybe really have another tax bite. So why don't you go ahead and share more?
Yeah, definitely. You bring up a good point, Jacqui. And what I'll do is I'll share my screen real fast for those individuals that are watching. I know I'm a visual person as well, but I have a little slideshow. Just it's 2 slides, just talking a little bit more about it. That way you can see the old and new, kind of how it compares to everything. So you guys should be able to see it now.
Yep.
I believe it's up. Are you able to see that, Jacqui?
Yep, I can see it fine. It says for those that are not on the YouTube side of the talk show, it says child tax credit, and I'll let you run with it, Joshua.
Definitely. So really what the child tax credit was previously, 2020, years before, it was you get $2,000 per child. Up to $1,400 of that was refundable if you didn't have tax up to $2,000. And that's how it was, pretty plain and simple. Once you start getting about above $400,000 in AGI, which is before your standard deduction or itemized deduction, then it starts phasing out and you know that $2,000 should go down to zero. Now, they completely changed it for 2021. And this is so far for 2021 only. They're talking about extending it, but right now it's only for 2021. It's now $3,600 if you have a child age 0 to 5, or $3,000 if you have a child age 6 to 17, which is great. It increases that credit. And now it's also fully refundable, meaning you're not going to get limited at $1,400 if you're in the threshold of being able to claim the entire thing. Now, the difference is they bring down the AGI phase out of the additional amount. So any amount over $2,000, that $2,000 to $3,000, or that original $2,000 to $3,600, it brings down the phase out. So if you're married filing jointly, and you make over $150,000, and say you have a child that's 6 years old, you'll see that $3,000 slowly dwindle lower and lower and lower. Now they cap you at $2,000 where they'll stop it. And once you get to $400,000, it starts phasing out again. So there's a lot of complexity behind it, how they're calculating, how they're going about it. That's how it is married filing jointly. If you're head of household, now you're looking at $112,500 is where you start phasing out of that bonus credit. Single, married filing separately, you're looking at about $75,000. Now, kind of talk a little bit about what Jacqui was mentioning earlier is the advancements. They actually are, IRS is required to give you an advancement if on your 2020 tax return, it shows that you qualify for the child tax credit. And what they're doing is they look at your 2020 tax return or your 2019 if you haven't filed yet. And then what they'll do is actually starting July 15th, so this month, is they'll send you partial of that credit to you in advance. So they're trying to send half of it within the next 6 months. That's their goal. Now, that's great because you can have some money in your pocket. The downside is if they accidentally send you too much, or if you end up finding yourself not being able to claim as much as you thought you were based on your 2020 tax return, because let's face it, we all had bad years, or many of us did, then at the end of the year, you're going to have to pay it back. And that's the downside of it, because with the stimulus check, anyone that received one maybe by accident or maybe didn't qualify, they technically didn't have to pay it back. But with this, you do. So what I've been doing is all my clients received the email. A lot of them also received phone calls talking about how you should, I recommend that you opt out if you think you're close to the 150,000 range, if you're married filing jointly, 75,000 if you're single, married filing separate, to opt out and just take the credit at the end of the year. If you opt out, you don't miss out on anything. The only thing is, instead of getting it in portions, you just get the entire thing at the end of the year. You don't have to worry about paying anything back. So that's what I'm recommending to a lot of people. Now, if you feel like you're going to be way below that $150,000, you could take it and feel comfortable, but it's something, you know, say one day you come across the lottery, you win $1 million, you're going to be looking at to pay that back. But and then lastly, they haven't really decided how they're going to handle separate households. That's the one thing that's still up in the air. A lot of times people have children where they'll claim the daughter this year, then next year the other spouse will claim the daughter, and they switch every year. As of right now, they haven't put any they haven't solidified any legislation talking about it. But my opinion is they're probably going to base it on whoever claimed them in 2020 is going to get that advance payment. But when they file their tax return, technically they're supposed to pay it back to the IRS. The person that is claiming the daughter that year should claim it on their tax return then. So it's definitely a piece where you want to sit down with your former spouse or your current spouse, if you guys are separated but not legally, and talk about who's going to claim this, who's going to reap the benefits. And if you guys do decide to opt out, you and your spouse have to opt out. It can't just be one of you guys. It has to be both, because technically, if you guys are married filing jointly, you guys both qualify for partial of the credit.
So I want to just a lot of great information, a lot of information. I want to quickly go back to something you mentioned in case someone was saying, what is this? Because you and I are maybe comfortable with acronyms. Explain what AGI is in case someone heard it and they weren't sure what that meant.
Definitely appreciate that. So AGI is your adjusted gross income. And if you look at your tax return, it's basically all the income that you had from W-2s, 1099-Rs, 1099 NESs, income from multiple sources. And it's the number that's usually right before your standard deduction. So you'll look on your tax return. Don't quote me on this one, but I want to say it's about line 9 or 8, if I remember. They're changing it every year. But if you look at that line, you see your AGI, and then right under that, you'll see your standard deduction or your itemized deduction, and it'll tell you that. And that's the number in line that you'll use to calculate if you actually qualify for this, and if how much of it you'd be able to get.
I'm visual like you too, and I sort of see the tax return in my mind as I'm going through, and you're right, they have changed things, they've added things. All right, so the takeaway that I'm just going to do a quick summary for those that have been listening. One of the things that is being suggested, especially if you're not sure where your income level is consider opting out. You're not losing out by opting out. You're just postponing the being able to take the child tax credit, but it'll give you more flexibility, because the challenge is like you said, if you get overpaid and you've spent that money and didn't realize that you've overpaid, then that means you're going to be owing it back, and that's a hassle. So, now the question is, if they start getting a check on the 15th of July and they haven't opted out, can they opt out? What can they do?
So even if you get that first check on the July 1st, it's not too late. You can still go to the IRS website and still opt out for future payments. So that way it's every month. So they'll send the first one July 15th, August 15th, September 15th, and so forth. So you should be able to opt out to discontinue the checks after you receive the first one. Now, don't be alarmed if you still receive one more, because a lot of times with COVID, the IRS is far behind processing things. So you still may receive that one more. So if you opt out today, you get the July 15th, and most likely, possibly, depending on IRS's systems, you may also get the August 15th. So don't be alarmed if you get the August 15th and then it stops after that.
Yeah, that makes sense. That makes a lot of sense. So that's the child tax credit. And that I had heard about the checks coming. I had no clue all the details. So I appreciate you filling us in on that. Now, the next area that we're going to be talking about today, I believe, is the dependent credit.
Yeah. It's another big one that changed, and I'll switch it over. Let me see. You guys should be able to see that now.
Yep, we see that.
All right. So the dependent credit actually changed a lot. And the dependent care credit, it's short basically for dependent care expense credit. And what really a dependent care credit, dependent care expenses, what those are, it's anything that you spend for your children or your dependents. So it could be, in this case, parents sometimes are dependents too, depending on your situation. Anything you spend on YMCA, summer school programs, nanny costs, daycare costs, those are all in dependent care expenses, and you could group them into there. A lot of times people don't realize that the summer school or summer costs, YMCA, summer programs, things like that are also included and go into this credit calculation. So now the way it was previously to this law change is that it was partially refundable. Excuse me. And it was $3,000 up to $3,000 for one child. If you have two children, it goes up to $6,000. If you have three children, though, it still max out at up to $6,000. So two or more children, it's max out at $6,000. Now, like I said previously, what it used to be is it phased out percent-wise that you get to take from 35% down to 20%, right? And really, once you get above $45,000 AGI, like we were talking about earlier, you're already getting 20%. So, for example, you spend $10,000 on little Emily's summer school program, $10,000 for her. If you made over $45,000, you could only take 20% of that. So now you get $2,000 of the tax credit. You didn't hit your $3,000 mark, but you got $2,000 of the $10,000 you spent. That's how it used to be. Now, this is another credit that is for 2021 only. That is only changed for 2021. They haven't decided if they're going to keep it going, but they want to keep it going. Now the amount is fully refundable. And they increased that $3,000 threshold to $8,000 for a child. And then they increased the $6,000 for two children to $16,000. So now it's if you have three or more children, the credit max out at $16,000. If you have one child, it max out at $8,000. If you have two children, $16,000. Four children, $16,000. And the benefit of it now is instead of the 35 to 20% where it already kind of really low and you don't get as much on your dollar, it's now 50% of the expenses if you earn between $0 to $125,000, which is great because now when you go pay little Emily's summer school program $10,000, if you're in that, say you make $120,000 a year, you can now take 50% of that $10,000 you paid for her summer school program. You're now able to take $5,000 deduction instead of the previous $2,000 deduction. So that's one of the big benefits as well from the dependent care credit changes.
All right, I have some questions here. For the age of the child, what is the age that they allow the dependent care credit to be?
Mm-hmm. So for the age of the child, I have to double check on it because they always changing it, kind of like the child tax credit. But I believe it's 16 and under, I believe. I got to double check on that one. I'm pretty sure it's 16 and under. If not, it may be 17 and under.
Okay, so that's something that our listeners need to check on. Don't make assumptions about the age. You have to, because that's a little bit different than the other discussion that we had, because that was breaking it up, in specific age amounts. So there was that question I had. And then the other question I had is, I know, again, I'm a single mom and I often thought about summertime, but this dependent care credit can be extended over the year, correct? So,
yes.
So it's not just activities that we do during the summer with our kids if we have a summer camp, but could it be like aftercare and things like that, or before care?
100%.
Right.
And thank you for bringing that up. It's anything that go towards your child's care while you're at work, you're busy doing something. Say you have a babysitter that comes from 5 to 7 o'clock while you and the spouse go out and do something, that also counts as well, dependent care credit. So all those items go into it. And if you're ever confused on what may count for it, talk with your tax professional and have a conversation about what can be included. Because really that 5-minute call that you have with them can mean the difference of you either including $5,000, $10,000 extra to be now eligible for more of a tax credit. Because tax credits are great. They're way better than tax deductions.
Yeah, no, I agree. So related to that, does it, what kind of accounting, what kind of record keeping does someone have to have for this type of dependent care credit? Because we all know it's not just say so, it's documentation. So, and then once you have the documentation, let's say that, now obviously it's easy if it's a child care facility, but let's say you have, like you mentioned, a professional babysitter or something like that. If you, so this is going to be a layered question. If you have that person who is consistent working and helping you at a certain time, do you have to then report their income and share that with the IRS, especially if it's over a certain dollar amount? So I'll let you answer that.
Yes, then that's a fantastic question. And a lot of times it boils down because a lot of times individuals, what they'll do is, they'll like to pay a babysitter under the table. We're all parents, we've been there. We like to pay a babysitter under the table. But really the way it should be is that babysitter should be getting basically a W-2 from you. And it's basically because you're hiring them to be in your home to take care of your child. It's not necessarily a 1099 that a lot of people would prefer to give. So really, you need to just be cognizant about that. Make sure that they get their W-2 because that's where you report how much you paid them, the taxes, and you take the deduction. If you're not issuing them a W-2 and for say you're paying them under the table, you're supposed to do the W-2 route. File it on Schedule H on your individual tax return, technically. If you're not doing that, then you really shouldn't necessarily be taking the dependent care credit, especially as well. A lot of times is you have to put in that person's information, whether it be their social security number, address, and obviously their information. A lot of times if you put that in, but they don't report it because you guys aren't on the same page, then they're going to receive notice from the IRS. And a lot of times it could, you guys end up batting heads because they thought you were doing it under the table. You're trying to get the tax credit for it. And then at the end of the day, it's a lose-lose because they could get audited and now they could trace it back to you. So to audit you and then go back multiple years on you as well.
Yeah. So again, if it's an organization or a business, it's easy to get the documentation. But like you're right, if you are personally hiring someone for a certain job, then you do have to look at with your tax professional, what you need to do to document. I see on your slide the 1099K reporting changes. What is that?
Yeah. So this is something else I was going to talk about as well. But 1099K, it's changed. It used to be, and what this really involves is anyone that runs payments through PayPal. If you run it through Amazon too, if you're selling things on Amazon, if you go through Square, QuickBooks, any of those merchant services or selling something through a website like Walmart, anything like that, it used to be previously that they only had to issue a 1099K and report what you sold and your income to the IRS if you made, or if you had transactions that totaled more than $20,000 that year. It's every calendar year. Or if you had over 200 transactions, right? So that's changed. They found out that a lot of people actually weren't reporting their income because they didn't hit these thresholds. So what IRS now are requiring, starting in 2022, they're giving everyone 1 year buffer, is to it's now up to $600. So instead of that $20,000 limit to 200 transactions, it's now $600 flat dollars. So if I sell my tax planning services to a good client and I charge them $601 and I have my payment process go through PayPal, PayPal will now issue me a 1099K saying they sent $601 through their system to me to make sure I report to the IRS. And what's happening is a lot of people aren't doing this, which is causing a lot of income to not be reported on their tax return.
Many people might not like it, but I actually like this because now, as a business person, I use multiple platforms to sell services or products. And it's, for me, difficult sometimes to remember, did my customer use Venmo, PayPal, Square, whatever, Stripe, whatever the form is. So I like the idea that these companies are required to now send me the information because it'll make it easier for me to organize that information. Now, people might not want to declare it, but the thing is that I think that maybe some individuals might not be declaring it because they just couldn't remember where it was.
Yeah.
So if it does become a requirement, even though I think 600 is low, but I understand why they're doing that. then I think that that will make it easier all the way around for all these new virtual employee, businesses that have sort of sprung up, because we're using these alternative methods to sell our services and products, whether it's Etsy, Amazon, whatever.
Yeah, exactly. And one thing I would say to be very, very careful about here is have a good bookkeeper, because I already see how this could be an issue. Is a lot of times what people will do is they'll have their process where they'll sell something through Stripe. For example, they sell a product, let's just throw it out there, $1,000. They sell it on Stripe for $1,000. Stripe records $1,000, right? A lot of times it hits the bank account at about $980 because Stripe takes out their fee.
That's exactly
now, if
right.
you don't have a good bookkeeper that knows that you need to report on your financial statements at $1,000, not the $980, you're now going to have a mismatch between the 1099K and your financial statements where you're reporting to the IRS. Your 1099K is now going to say you made $1,000, but when you report to the IRS, you're going to say you only made $980, and the IRS is going to send you a love notice saying what's going on here. This is mismatch. Please explain what's going on. And a lot of times, if you get that, that's just the start of something could be real messy.
Well, I mean, the thing is, if you report the 1,000, then again, I'm not giving tax or professional advice because that's not my area. But that fee that was charged could maybe be a write-off as a business expense after you consult with your accountant or tax professional. So you still might end up having that adjusted gross income being the lower amount, but you're showing that there was a bank fee that was taken that so it's a ledger. So yeah. Am I correct in thinking that?
Yeah, you're 100% correct. That's the biggest thing. At the end of the day, your net income number is most likely going to be the exact same, but it's how you report it. And if you don't put, obviously your numbers in the right boxes to match everything to, your 1099Ks, or at least more than your 1099Ks, that's what's going to trigger the IRS saying, okay, automatic notice being sent out. What's going on here? If they don't have a good explanation, we're going to assign an agent to this to figure, to go claim the taxes still due.
Yep. So that's great. So the two things that I'm going to summarize here is the 1099K reporting change doesn't hit until 2022. So we really don't need to think about that this year. However, it doesn't mean we can't get our books in order in anticipation of what's about to happen. And the dependent care credit actually is for this year only, unless there's a change. And if it's changes, do you think it's going to go back to the old or revert back to the old, or what's going to happen?
Honestly, if it changes, I think it's going to just revert back to the old. I think this is just their way of trying to get more money out there for individuals in this income range to help them out more. I honestly could see that this, or at least a version of it increasing, would go into as permanent law. But it all depends, because there's a lot of political stuff going on out there. President Biden's trying to pass, or I think he did recently pass, his infrastructure bill. They have to fund it. Are they going to take more money from the rich, but give it more to other individuals in this category, but have less for the infrastructure? So there's a lot goes behind it. Long story short, I think they'll probably end up reverting back to the normal amounts if they do revert back.
That's a lot of great information. Everyone, this is exactly why you need someone like Joshua in your court, because you want to follow your passion and you want to, spend time with your family, and all these little nuances. It takes a lot to stay on top of it. So, Joshua, what's your website again so people can connect with you?
Yeah, so the best way to reach me is my website, thompsontaxgroup.com. Like I said, Thompson's THOMPSON, and then taxgroup.com. You can also give us a call at 805-364-0908. On the website, you'll see my email address, the phone number, the best way to contact us. If you just want to hop in, you could book a quick call just to kind of get to know us, ask more questions, figure out if we're the right fit. We'll kind of go through that interview process as well.
Yeah, no, I think having someone like yourself is critical for, everyone, whether you have a business or not. It's, there are ways that you can definitely save money and learn as you do this. And, as I mentioned earlier, I am definitely a serial entrepreneur with many businesses, from travel to a lot of different things. But my original background is law. And I'm just going to put it out there. I think it's, I'm not practicing law right now, but I know how valuable professionals are, from accountants to attorneys to doctors. And these are your team of people. And I recently became, because I've been meeting people all over the country and world, I recently became associated with Legal Shield, and my link and website will be on there. And the reason why I'm suggesting this is not so much because I'm associated with Legal Shield, but I've met a lot of people who don't have a will, who have not been doing estate planning, who maybe got speeding tickets. There might be, they might be doing Uber as a rideshare business. There are a lot of add-ons that Legal Shield can help you with. It's very affordable. If you can, buy a cup of Starbucks every day, you can definitely have pretty much unlimited legal access through Legal Shield. So I'm just, sharing that information because I think doing your taxes is as important as making sure you have a will and have been thinking about your estate. Because if you own anything, you need to have a will. If you have a child, you need to have a will.
I mean, a lot of people underestimate it. They always think it's for the rich, it's for the wealthy, people with hundreds of thousands, millions of dollars in assets, but it's really not. It's for everyone. It's a great way to, most cases to avoid probate, as far as I know. And that's just, I think a will's a good foundation to every financial and tax plan or even legal plans, individual has in their life.
Yeah. And the one last thing that popped into my mind, they also will help with medical power of attorneys and other situations that, again, being in the travel side, I'm always suggesting people get travel insurance. It's because of the unexpected. And a lot of times we react instead of, plan. And so the conversations that we're having here today are all about planning, so you can have a more enjoyable quality of life and more peace of mind. So Joshua, I look forward. I know we have it on the schedule that we're going to be talking about fringe benefits, which is another topic that, there's a lot of changes. I know we're going to be talking about retirement plans and what both millennials as well as those in all other age brackets need to be thinking about, because again, from the accounting perspective, that's even different than the legal side. Mm-hmm. And we're also going to be talking about if you happen to be dabbling in the digital asset, cryptocurrency, blockchain, non-fungible token area, which I have another talk show about. That's another thing that everyone needs to be thinking about. What are the tax consequences of being an investor, whether it's an investor in stock or crypto? Again, just know what the rules are, and that way you can have more fun with it. Because again, it's all about knowledge. Knowledge is power.
Definitely agree.
So one last time, say how people can reach you.
Yeah, so you guys can reach me on the website at thompsontaxgroup.com. You can give me a call, 805-364-0908. That's 805-364-0908. You guys can text me there, or if you guys like, you can also email me, whichever works best for you guys. My email address is joshua@thompsontaxgroup.com. Happy to have a conversation with you or help you out as much as I can.
Again, all that information will be in the block below. Definitely like and subscribe, because we have a lot of interesting conversations happening each month with Joshua. And there's a lot of other historic conversations that the content is still current. So that way you can check it out and see how it applies. And if you have a specific tax question, message it over. We'll do the research and we'll, pop out some information to help everyone who has probably the same question.
Yeah.
So thank you, Joshua. I will talk to you soon.
Of course, Jacqui. Thanks for having me. See you guys later.